So the panel discussion is titled Funding Shipping in Transition, New and Traditional Sources of Capital. And with us on the panel, we have some of Hong Kong's leading ship financiers who will discuss the latest trends in shipping finance, and especially providing an Asian perspective. Moderating the discussion is Mr. Christoforos Bisbikos, who is the head of the Hong Kong office and a partner at Watson, Farley and Williams. Just before I hand over to Christoforos, a reminder that if you would like to ask questions, you can ask them by typing them into the questions box there on your control panel on the right of your screen. Christoforos, over to you. Thanks.
Yeah, thank you, Andrew. Thank you, everybody. Just allow me, please, to quickly introduce my fellow panelists. And let me start with Mr. Stephanie Liu, who is the Executive Director in the Shipping Finance and Global Credit Markets Desk at Standard Chartered Bank. James Tong, who is the Head of Global Shipping and Logistics in APAC and Head of Diversified Industrials in China with Citibank. And last, of course, but not least, Mr. Gwenael Delattre, who is the Head of Shipping and Offshore in APAC at Societe Generale. My first question is actually linked to the previous panel. So I wanted to ask you what's your opinion in terms of whether Hong Kong will remain a very important international financing hub, or whether it will become in the future a hub for mainly Chinese financing institutions. Anyone who wishes to answer this question?
James? Sure, I go first.
Yeah.
Well, good afternoon, everyone. Good to see you and the panelists too. Have this opportunity to share a moment with you guys to share my opinion. I think Hong Kong will continue to be one of the important financial hubs. I think it is important to note that China is part of the international players now. So it's not just a Chinese company or Chinese financier. It is a hub that connected to the world. The infrastructure will not be able to replace that easily. And not to mention all the professionals in here, because it does take generations of culture to create professionalism that Hong Kong has been dominating that in the last 20, 30 years. I think while Hong Kong is one of the important financial hub, I think also needed to stay competitive. So we needed to continue to be innovative and also taking step forward in terms of such a green financing, capture different financiers to provide people with options, And when China is developing into the international model, we see that even Hong Kong, we've seen a lot of people from Africa, Latin America, from Russia, and now in Hong Kong too. So that the world it becomes so much bigger, so to speak. And then I think it opens even more opportunities for Hong Kong to stay on the top. So that's my opinion.
Thank you, James. Well, sorry, one technical issue. Oh, there you go. Now we see Gwenael, because previously we couldn't see him. I'm not sure if Gwenael, you had the question and whether you'd like to add anything from your end.
Sorry, no, it's not specifically. The question was about whether Hong Kong has the means to remain a preponderant shipping finance place.
Yeah.
Yeah, absolutely. I think it was also discussed on the previous panel that Hong Kong has the whole ecosystem to thrive as a maritime hub. Not only is it a gateway into China, which is of course a very important factor and a very competitive advantage. China being expected to remain the economic powerhouse for several years and decades to come, but also it's also one of the places where actually Western capital flows into to spread its wing, I would say, into the whole of Asia. So I do think that indeed Hong Kong is quite well positioned to remain a very important place in the maritime sector. I mean, on our side, I mean, our regional headquarters is here in Hong Kong, which I think is a testament of what we believe for the city.
Stephanie, would you like to add anything?
Yeah, I think I'll just echo what my other fellow panelists have mentioned. Shipping itself is an international business, so Hong Kong as a maritime hub, I think the previous panel has also mentioned a couple of things that we need to stay competitive, and I find it actually very encouraging that there's a lot of efforts that are being made to bring in more talent, to actually look at how we can improve the lifestyle, how we can actually encourage talent to come in, because without that, I don't think Hong Kong can stay competitive and you know.
Okay, thank you. I mean, going back to finance, I know it's been, last decade was interesting to say the least. I mean, we also the post-mortem of the credit crunch, which of course have affected ship finance. We saw a number of banks exiting and new players coming into the market. And after that very interesting decade, now we have a very interesting and even more interesting beginning of a new decade, with COVID. And but I wanted to ask you, I mean, shipping has proven to be very resilient in these difficult times, and most of the sectors have not really been affected. In fact, some of them have become even stronger in terms of rates in the market and market values of the assets. So I wanted to ask you that, in conjunction with the fact that we've seen that liquidity is not a problem these days, are you concerned with the influx of capital in the sector long term? I mean, is this a bit of an alarm for you when considering projects? Or maybe Stephanie, you'd like to start?
Well, I think in general there is still a lot of capital in the market, and there is generally probably, if you want to say, a lack of good investments place in, and shipping is still quite attractive. But I do believe that the hot money that flowed in about 8 years ago has changed. If you look at a couple of panels before, the ship owners that have remained have learned, are also taking a cautious approach. The global order book is up 4% from the start of 2021, but ultimately it's still equivalent to just 8% of the existing fleet. So I think we are cautiously watching it to see where the money is flowing, but at this stage we are not too concerned.
Thank you. James?
I think it's good to have money coming in for the shipping market. I hope that ship owners would have learned that we are in an inflection point of environmental concern in here. The lack of investment is because there's no real technology that is completely green in shipping. So that holding off a lot of investment, which is good because in fact, scrapping is part of the problem for the green ships too. Maybe instead of just waiting for the new clean gas, we could think about how we could recycle those ships that make it as a longer asset. So at that time, those financiers could look into these alternatives. My only concern would be when there are too many hot money coming in, those are the tourist financiers. They are the one that will fuel the speculations. That's whenever there is a crash in the market, who is going to suffer? That would be some of the banks who have been here lending for a long time. When it got affected, they might have to retrieve, but those expertise are with them. And then we get into those tourist financiers coming in, and they actually ruin the market and ruin the party and go. I think this is something that is a collective thinking too. It is important to be able to look at it as a financing opportunities or investment opportunities. The consolidation of the market is also a good thing. You mentioned about shipping being the one that is not affected, which is true, because still 90% of the global trade is seaborne, unless you've got teleporting or I was thinking that is exactly, or protectionism, when people started to build their own things, but I don't think that will work. I think it is in fact the COVID-19 should really accelerate us to think collectively how we could make this sector more efficient. And the ships are important tools during pandemic time, but then we got backlog in terminals. maybe this is something that we need to look beyond just only shipping, is how shipping company could actually go beyond that into the logistic planning. Technology should help. And so I hope that those investors coming into the market, not only looking at investing in the hard asset, but also in the efficiency, the green and software to help flow, and there's cut down a lot of unnecessary wastage. Then I think the sector will have continued to build the value in there. Otherwise, the next cycle or next crash will be coming.
Thank you, James. We'll be talking about green in a bit, green shipping. But I wanted to ask Gwenael what are his thoughts, and I would also like to ask you, Gwenael, whether you are looking to grow your portfolio by investing with your existing clients, by growing exposures with your existing clients, or you're also open to to listen to new ideas from new people. Maybe you would like to.
Well, we are in growth mode. So, I mean, the obvious place to start growing is, of course, to do more with our existing clients. And I think that's pretty much the favorite path for every institution, especially since what James was mentioning, there have been some people being burnt in the industry for coming and going. And I think that, anyone coming into this industry will be comfortable staying with the same safe space in terms of clients that they can be banking with. On our side, I think we've been in the industry long enough to know what we are comfortable doing, what we're not comfortable doing, and on that basis, we're very happy to look at onboarding new clients whenever it matches our philosophy, our risk appetite, and where there can be a match is basically when they have a sufficiently conservative mindset, trying to get the whole business together on the commercial side, technical side, and also on the financing side. I think that where it's more difficult for us is to have new entrants into the business saying, I'm going to create a fleet from scratch and, operating on the spot market, and I'll see where it goes. Basically, I think we probably need a bit more than that.
Yeah. Stephanie, are you looking to grow exposures with existing clients, or are you keen also to explore new opportunities?
I think exactly the same as Gwenael. The way he put it quite succinctly, the last thing we want to do is to actually become one of those hot money that got burned 5-6 years ago, right? We don't want to, just because the market is fantastic at the moment or slowly getting good, we don't want to be the ones that simply throw money without looking at who is behind it, whether they have the sufficient experience to do what is necessary if the market then goes in a down cycle. So it's key to also be able to ourselves put our money and invest in the right people as well.
Okay, thank you. James, are you growing your portfolio? Are you looking for new opportunities?
Well, if I'm not growing, I'll be gone, I suppose. Every bankers would be. We are always looking for opportunities, even new clients, while we are also culling our existing clients too, because there's a shift. When you're not catching up, investing in the right asset, whether it's green or not, they will eventually be phased out. And also the ability to raise funds more than just only in the bank market will be critical. Do apologies that I have dogs at home. Yes, we'll be very interested in investing in clients who has got the same mindset, and also we'll be looking at opportunity to tap into all financial products, capital markets, and all the other instruments that make use of our globality. I think that will be those clients that will be very interested in developing a new relationship with them. Otherwise, we have got long-term relationship with clients like Gwenael and Stephanie mentioned that. Those will be the important fact, I think, the foundation of the shipping industry. They would be having solid experience and also balance sheets to morph into the next generation of ship owners.
Okay, Yeah, I mean, yeah, technology seems to be very, very important. A number of people in certain sectors in particular, because in container ships and LNG vessels, I think, you know, things are kind of evolved in the sense that, you know, most people are not looking for LNG fueled vessels. But for other sectors, I think tankers and bulkers, it's a bit more complicated, I guess, due to the infrastructure. But can I ask you something else? Maybe Gwenael, I could ask you. 4 or 5 years ago, everybody was talking about the withdrawal of banks. Everybody was talking about leasing, particularly in China. Things have somehow stabilized, I think. You know, we haven't seen any significant departures recently, at least. Do you think that things have now matured, or do you see more exits given the regulatory, you know, changes in the regulatory space, you know, in the sector?
I think the banking industry, just like shipping, is in constant evolution and very dynamic. We did see some banks not necessarily exiting, but rather going back to their more domestic markets. Some banks in Europe, for instance, which exited Asia. I do think that leasing confirmed the very prominent place it is taking in shipping and will continue to take in shipping. So, I mean, yes, overall, we see that things have stabilized, but what I would like to say is that more importantly, those evolutions that we've seen do not impact the top tier clients that we deal with. You know, much to my dislike, I still see a lot of liquidity on the same clients that we want to bank with, because I think that because people looked at what went wrong with some of the players which decided to exit, you know, whether it's private equity or it's alternative capital and so on, what they realized was that they were taking maybe a bit more risk compared to what industry is prepared to take. And we've seen a flight to quality. So even with some people, you know, retreating from the shipping markets or going back to their domestic markets, we still see that the top tier corporates are pretty much very well banked, which drives prices and sometimes terms down these days.
Yeah, Stephanie.
Yeah, I think leasing is here to stay. It is definitely part of the financing ecosystem now. We ourselves, we finance lessors, and we are happy to, because they are able to take away a part of the residual risk that perhaps we were less willing to take on, and they're able to provide recourse, which works well within our return framework, and particularly with Basel IV coming up. So these are all the sort of things that we need to consider. So, but ultimately, you know, we still have sufficient capital to bank both lessors and ship owners that are our existing clients or new clients to be onboarded. So, I mean, in summary, leasing is certainly here to stay, and it's the market is big enough to cater for everyone.
Okay, thank you, Stephanie. James, do you think things have now stabilized? The banks which have stayed will stay, and the leasing houses will, you know, keep their growth at the level of today, or do you see more changes happening in the future? You are mute.
Okay. I'm sure that there'll be more leasing company coming to the market. It doesn't have to be Chinese, because Asia is booming. We need a new fleet for green ships. No shipping company could replace the green ships at one go. That means more capital will be required for that, and it gives option. I think it's important part is amongst ourselves as a shipping profession can actually share those knowledge with those new kids in town, so that when they enter into transaction like that, can make use of the experience that we have so that they could support the right client to build a fleet, so that it would not be flooded with unnecessary assets and that jam the market. So I think yes, you know, I think the more the merrier in a sense, to give options. And it also distinguish clients too. Those clients who has the capability to raise all sort of financing could weather a stormy weather longer than those clients that only rely on one or two types of financing. So I think having leasing company here, as Stephanie mentioned, that would take some of the residual risk that some banks would not like to take, or actually, in fact, most of the bank would not like to take. And also allow those shipping company can concentrate on their operations rather than think about how to burden their balance sheets, because leasing company normally are very well capitalized, and shipping could be just only a portion of their loan book or of their portfolio. So we'll be looking at a different risk in that sense. So to me, yes, I think it should be here to stay.
Okay, thank you. I mean, when Gwenael earlier mentioned that there's a lot of competition between banks because they're all looking to finance the blue chip companies in the sector. But we've also seen, you know, a kind of approach from the leasing community, particularly in China. They are trying to somehow compete in terms of pricing terms with Western banks and with the Asian banks. Of course, there's still a difference, but they have come closer. And then on the other side, we've seen banks trying to approach their leasing houses in terms of offering higher leverage. Do you see that at some point both financing institutions will be offering similar terms, and therefore you are going to become competitors eventually, or do you think that there will always be a gap? Gwenael, maybe you'd like to add anything.
Yeah, I think this is a question that we asked ourselves a few years ago, whether we should compete against them or partner with them. And I think the answer became pretty clear very quickly that we could not compete with them. The reason being that they are willing to put this extra leverage that banks cannot simply do because of regulatory capital that they have to put in front of those loans. And, you know, when you look at pricing, yes, it's more expensive than banks, but when you factor in that extra LTV versus the cost of capital or cost of equity that a ship owner would have to incur on equity, it would have to put himself. I think overall it's competitive, and I think that you know, it was mentioned as well by Stephanie and James. We're very happy to see Chinese banks take some risk that we wouldn't take, you know, especially residual value risk and technological risk in the current uncertainty. I think it's very important that someone, you know, takes the extra step to help the industry, and for that, I think Chinese leasing partners, Chinese leasing companies are partners more than competitors, and will probably remain like that for quite a number of years.
Okay, so I presume that Stephanie and James, you agree? Stephanie, I think.
Yes, absolutely.
Okay, all right, and so going back to what James was saying about green ships, we've seen a few transactions. You know, I know some of you have been involved in some very important transactions lately on the green shipping side. Do you see this product evolving more in the sense that you could see potentially even more favorable terms when the asset is technologically, environmentally friendly? Do you see banks taking the initiative, in other words? Because we carried out last year a survey which is available to anybody. If anybody wishes to receive you know, their findings, please let me know. And we spoke to a number of leading individuals in the sector, and what we were told basically by some of your colleagues is that the banks are not willing to take the initiative. They only want to follow their ship owners, you know, in terms of what they should be financing. So I wanted to ask you, are you thinking of making the product a bit more attractive so that ultimately the ship owners will take the financing side into the equation when considering what to buy next? James.
Well, when you mentioned about more attractive, it's basically lower cost, longer tenure, high LTV. But I don't think that is in fact a better financing. I always said that all these years in the platform and podium, we should get paid more so that those clients could make use of this limited capital and fend off unnecessary competition that created to ruin the party. You know, when funding, when we talk about technologies in here, right? Our bank has been involved in a lots of new technologies like cabling, the first canal, containerized shipping, ATM, you know, all of these. So we have carved out a lot of those funds to invest in the green space, technology space too. I think for better, the product will continue to evolve. As Stephanie mentioned about Basel IV, we're in a regulatory industry itself. It's whether those assets make sense. Like, say, for example, nowadays the electric car, a battery car, are they really car, or are they just only computers on wheels? You know, maybe we need to look at shipping completely different too. Because at the end of the day, we know that global trade would rely on these ships. And if they are continue to use current energy like that, no matter what, it's still not a green element in there. So I think it is important to invest in good technology, but sometimes we don't need to necessarily reinvent the wheel. Knowledge is important in this industry, from shipbuilding itself to scrapping to financier. We're all part of this. So I think it is important to be able to create a knowledge-based financing. I think at that time, client would appreciate much better how we can allocate our capital, and they understand that sometimes cheapest funding might not necessarily is a responsible financing in here. So I think the COVID-19 should either break us further or unite us better. So I think the shipping industry would have the wisdom. Otherwise, there would not be Global Maritime Forum to discuss about all this emission and Poseidon Principle about decarbonization. It's not about lowering the financing cost. It's about responsible financing and responsible shipping industry to the global community. I think when we look at that, that would be a better product rather than just only what I mentioned earlier, high LTV, longer tenor, and lower pricing. I hope that answers your question.
No, it does, but I'm also thinking about people, for example, that you wouldn't necessarily be financing in, you know, because they're not big enough in terms of companies, but they wish to finance a particular asset which you think is basically the flavor of the month technology-wise due to the environmental.
I don't know. I don't know about anything about technology. I think it's the willing to try at the moment to push for the new energy. Even though you're talking about dual fuel LNG, LNG does produce carbon.
Yeah.
Okay, there's no perfect world at the moment. So it's just along the way, companies willing to invest in technology, and I think banks should be able to partner them to facilitate those willing. Some of the banks might be the followers. Some of them might just wait and see, but that is not the way that, at least not us, to look in the financing. We want it to be responsible. I think there will always be bystander or freeloader in the sense, you know, going into the market. But I don't think those financier will stay long. I think having partners like all of us in the panel in here that have our own ESG requirement too. Banks also have reporting to the ESG annually. What sort of financing we're providing to the different sectors. So we are part of those global policing. I think it's still willing. But for those who have not yet signed up or who are following that, I think we needed to look at them. What is the, other than cheaper financing, cheapest cost, what would they create? Maybe they created something that they would not be able, they would not see it because it's so far away, right? So I think it is important. I think the shipping industry knows. They know that if they do not take control of this, the regulators would. Then that would make it harder for them to be able to sustain sustainability in the sense.
Okay, thank you, James. Gwenael,
Yeah, I think that banks are here to steer their clients towards the better good, but most of our clients already are aware of what they need to do. You know, when it comes to technological uncertainty, in the end, we're not engineers, right? So we have to be able to trust our partners, to be able to trust their judgment and their intuitions, and we're happy to follow them. I think that's what you were describing, you know, trying to finance new technologies, where it's very uncertain. I don't think it's a senior lending type of business, to be honest. It's more a startup or venture capital type of business. And I'm not saying we shouldn't do it. I'm just saying that we're not equipped to do it in the current regulatory mode. And I think that if the regulators, the financial regulators, were also to help us, help our clients try and develop these new technologies, for instance, by, you know, giving us you know, some regulatory capital exemptions when we finance something which is very, very innovative, R&D type of approach. This is where banks could have this kind of startup attitude, and it would definitely help, I think.
Thank you. Stephanie?
Well, I think to your point about whether will we finance a particular type of asset just because it may have the green label, I think ship owners at this stage, the technology is still not there. No ship owner will be able to say that I can say for sure that my vessel will be carbon neutral, for example. So I think rather perhaps banks have a different role in a sense by enabling the company to maybe meet their ambitions in developing their own carbon neutral footprint. I mean, Standard Chartered, we have set ambitious sustainability aspirations, and shipping is definitely identified as one of the sector within the transition framework. So this is important for us, and not just through financing. There are other products that can help ship owners as well, like bunker hedges to lock in cleaner bunker fuel, and maybe facilitating a more mature carbon credit trading program. These are some of the ways that we can do it. But I think to actually invest in a startup, maybe that would be a different sector indeed, investment sector, not banks.
Okay, thank you. Last question from me, because I'm worried about time. 2021, how do you see the year evolving? So are you going to be busy, you think, with new projects? I know that, you know, Stephanie spoke about caution to the wind, you know, but of course growth is the flavor of the month. And if you are looking to finance projects, what type of asset would you be you know, looking to finance? James, would you like to start?
Agnostic. We finance relationship. We don't finance assets.
Okay.
That's I've always emphasized. Hopefully we'll be busy and productive. I think also for planning for the after COVID-19. So there are lots of contingency planning and all other matters too. So I think we'll continue to stay put of what our clients require us to do, and at the same time trying to continue to be innovative and look for opportunities that would lead the industry into the future. So that would be my plan, and hopefully travel free soon so that we all can connect again in person rather than sitting on the computer.
Yeah, Stephanie, your view? So any type of asset that you would have a preference on for 2021? No.
Sorry, you hang there for a while.
Oh, I did? Okay. Can you hear me now?
Yeah. Okay.
Okay. Anything to add from your end?
We remain client-centric. We're here for the client. agnostic to what the sector is. What I would say is we would be certainly interested in doing more in the sustainable financing space. That is definitely on the top of my agenda. But other than that, we're here for the clients.
Gwenael, same message?
Yeah, pretty similar. Yeah, we're also very much client and relationship driven. We're happy to accompany our clients where they want to go. I think in terms of assets, everyone wants to finance the sexy type of assets, that can have a very positive environmental benefit to the world. I think for us, what we look at is, yes, ability of our clients to go towards that energy transition path that we're seeing in industry, and also because the markets are quite hot these days, we also are mindful that we want to bank the right client, which will be able to go through the next cycle, because I mean, cycles don't go up to the trees, especially in shipping. So we're cognizant of that.
Thank you all very, very much. Andrew?
Thank you from me as well. Thank you, Christoforos. Just one question from the audience that I'm going to ask today before we close. And I'm going to ask each of you, maybe starting with James. And the question is, would you finance a pioneering new vessel design? So say hydrogen or wind powered or some kind of great new technology. Would you be the financer of that, or is that a deal for the owner's own equity?
Sure, we would, because I would assume that ship owners, it's not just only have one ships, and that is something that, as Stephanie mentioned, there's no one can say there's a proven technology. But if it helps to lead the market into the next generation, yes, we would. And even though we might not directly financing them, we will be able to advise them to bring them into the right people to provide that kind of financing. This is, I think, what we would do.
Yeah, I think same answer. We definitely would want to finance these kind of assets. Ultimately, it doesn't mean that we would finance it in a kind of a non-recourse with pure residual value type of risk, because if it's a new technology, we also need to cover our credit risk, I would say. So, in the end, when you look at how new assets have been financed in the past, there was always someone trying to back, in some ways, the project, whether that's the contractual off-taker, the ship owner himself, some form of state support. I think to me, that's a prerequisite to any first financing of any new emerging technology, I would say. One of the three types of support.
Stephanie?
Yeah, exactly the same. I think if it's for a client and there's recourse, which shows that we are working hand in hand, we have our, both have their feet wet in this new asset, certainly, why not?
All right. So thank you very much, James and Gwenael, Stephanie, and Christoforos for the discussion today. Very interesting. That brings us to the end of our conference, our Marine Money Greater Bay Area Ship Finance Conference. I hope that all of you who are listening in have enjoyed today's discussions and found the conference valuable, stimulating, perhaps learned something new and left with a better understanding of where we are and where we're heading. Just before I close, I would like to again thank our partner, Invest Hong Kong, and our corporate sponsor, Crédit Agricole, for sponsoring the conference today. We do sincerely hope that the next time we meet, finally after a year and a half or so, will be in person in Hong Kong later this year, maybe as part of the Hong Kong Maritime Week. And until then, we'd like to wish everyone listening in and to all our panelists good health. And thank you again for being with us today. Have a great day.
Thank you.
Thanks.
Thank you.
Stay
Thank you, everyone.